Hey traders, and welcome to today's video. So in today's video we're going to be discussing market efficiency paradigm, and I'm going to be going over the trade I took today. Using that to explain the market efficiency paradigm, I'm going to go into the TradingView platform to use a repair tool to show you in real time how we engage the markets using the market efficiency paradigm. And I believe at the end of today's video you're going to take home a great lot of insights to better improve yourself and better your trading. So if this is of value today, you can hit the like button, the subscribe button, and see you right in the chat. So I told you guys to log your trades, and I'm actually doing the same on this journey. Mind, I told you it's a 3-month journey, and this is going to be episode 3 of this ICT New York Killzone series, traders development series also. So far so good. I've logged in based on this series. I've logged in 4 days, and today being the day we're about to review is being the 6th of April 2023, and at the time of this recording, this is actually Friday already, which is the 7th of April 2023. But this is the price action we want to look at, the one from yesterday, so which is on the gold USD. So I'm bring out that. So this is what the trade setup looks like, and this was why I marked it up. But before we come to this place, let's go all the way to the daily time frame, what we had on the daily time frame. So this was what we had on the daily time frame right here at this region. This was yesterday's, which was on the 5th of April, and this is the 6th of April candle printing right here. Good. And at the time of this, so we had this high and this low right here. So if you go to the 4 hours, and this was what we had. This was how the chart was looking. We had this high here, we had this high, and we had a high. This high is over here. If you go to the 1 hour, this is what we have before the 6th of April candle started printing. This is what we had right here, and this was the 6th of April coming right into this high, and that high is this 4 hours high over here. So you can see the way price ran towards it there. So on the 1 hour, you can see clearly also clearing this low right here, this previous day low of the 5th of April. I can see where price started bouncing off. So with that context in mind, this was the execution time frame, which is the 5 minutes. I told you the execution time frame we're using is 15 or 5 minutes, depending on the one that presents to us clearly what we're looking for in terms of price delivery. So this is that low right there that took out this previous low, and also tanked into this previous 4 hours high. This is that low right here, and we can see our price moved enter into the New York midnight session, and that's the New York midnight open price. That's this line right here, and price started building up. So at the time I outlined this high and also this high here, this is the whole daily high of the previous day, and this is the high, and this high is very significant in terms of, you can see the notes I left here. Say if BOS happened here, change of direction would occur. Note swing high can be traced to the 1 hour time frame. So if you go to the 1 hour time frame, this is that particular high over here. So I was like, if price move to the buy side and hit out that high, then we're going to expect bullish prices today. So that was the concept in mind for institutional order flow. Mind, I told you we're using 3 things to be able to time our entries. We're looking at institutional order flow, we're looking at price delivery, and we're looking at time and price. So this was price building here on the 5 minutes, but didn't get to that high, took out that high. And while we entered the New York session, we saw price drop, and all of a sudden we had a news that came up positive and price rejected. But because of the momentum has already been programmed to be towards the sell side, we saw the way price reject. So at this point, I wasn't chasing price, I was just waiting quietly, and my eyes were on this particular low right here. And if you trace what I wrote here is sell momentum confirmed with break of structure swing low. Note all the way from the 1 hour. So if I go back to the 1 hour chart right here, This was that low right here. This was the low right here. I was expecting price to attack, and we can see the way price ran that low right there. So that was a break of structure, confirming our institutional order flow to be bearish. And you can see the way price protracts or retrace right there and giving us an entry at this down close candle right there. And this is exactly 9:35 a.m. New York time, New York Killzone, exactly on the ICT New York Killzone, exactly 9:35 a.m. And the entry was on the 5 minutes on the down close candle. You can see the way I outlined it. So that was where we had a sell, and that sell we took out our positions right here, which is our exit and target at the old 4-hour double high. So you can see this is the double high right here. So you can see the flow in the marketplace. You understand, the predictability in the whole setups, how we're able to arrive at this whole flow right here. And you can see the way price tapped to each areas of liquidity in terms of price delivery on the gold. You understand? So I'm going to go to the TradingView platform right now to just show you in real time the step-by-step approach on how I was able to arrive at this particular setup using the replay button. And you're going to see for yourself applying the market efficiency paradigm and why we had a sell day on Thursday, just like I had said earlier, going forward. So let's go to the TradingView platform. So yeah, the TradingView platform right here. If I go over to the daily time frame, this is what we have right here. So this is this candle right here, the daily candle right here, which was the 6th of April 2021. So it has actually, it's showing here that it has actually printed. So let me clear it out before it forms. Let's see how price looks. So this was how price was looking before it formed. We've seen this low tap into this particular high right here. But if I zoom out properly, what you're going to be seeing is that let me mark out the high. So marking out this particular high right here, you can see that this low didn't really touch that high right there. Then if I mark this other double tops high right here, you can see that price also has not reached there. So one can expect price to come out, run this low and push up, you can see, to the buy side, or eventually drop into this down close candle here, which will serve as another block. So the next thing we'll do is to drop to the 4-hour time frame. Mind I told you the way you should mark up your chart. You want to pay attention to highs and lows, and that because that's what's going to give us a framework and context to really identify what the market makers are actually doing in terms of price delivery. So if you also look, this is also a significant high on the 4 hours. So I'm going to mark out and that out because price has shown a willingness to repel from that particular high right on the 4 hours. So a significant one, we want to mark that out. And also we're paying attention to this low, but the reason why I will not mark this low out is because of this high is already in close proximity with that low right there, so I'll leave that. So based on where price is currently, I think we've done the necessary or the needful for the 4-hour time frame in terms of marking the highs and the lows. Okay, let me just mark this low right here also, where price has shown willingness to repel from that low. Exactly. And the next will drop to the 1 hour. So this is just before that day, which is the 6th of April, started printing out. These are the things you should have done in real time. Good. So that's high, and so this is this low. So now mind you, on the 1 hour chart, now in 1 hour chart, we want to take into account every single details in terms of all the daily highs and all daily lows. So this is an old daily high, and this is also an old daily low. So it's very important that I take into account that low right there, just for clarity's sake, in terms of price delivery, so we know when that low is actually being tapped into. So that is that low there. So in terms of where price is currently, I think it's significant that we really are tying that low, because we're looking at just 3 days or 2 days, and I believe the price action we have on board right now is enough. So in terms of in terms of market efficiency paradigm, when price show a willingness to run away from a region and produce what we know as an imbalance in price, which is this region right here, and mark that out properly, which is this region right here. When price show a willingness to rally from a region, producing what we know as an imbalance in price, this will drive up. Price will want to seek to come and rebalance that area because this is an imbalance in price. So, and that is what market efficiency paradigm is all about. So, mind you, yesterday we saw price while it pushed up, he entered into a mitigation block, you understand, and started repelling to the sell side. You understand? So this was more like a reversal. Coming to think of it, it's more like a reversal because price stands into an area of resistance in terms of a mitigation block. So the market makers mitigated their buy orders, which they started at this region right here. So they bought all the way to this high, mitigating their positions at that mitigation block. And what happened? They started selling. You know what I'm saying? So this region. So now this day we don't know what to expect with the benefit of hindsight how we were talking, and that's why we're using this repeal tool to help us think in real time. Good. So in this day we don't know what to expect, but what we know is that we are only focused on the New York Killzone. That's the ICT New York Killzone. That's what we're focused on. So to better help us know where to focus our energy on, you want to be sure if you're using the trading view platform for analysis, you want to be sure that your time zone is set to the New York time zone. Very, very good and very, very important. So while on the 1 hour, you want to outline the 8 o'clock New York session, which is right here. So I'm going to bring the vertical line and outline that immediately. So let me use the vertical line and outline. So that is 8 o'clock right there. So then I want to also outline all the way to 10. That's then I want to stop at okay, I want to stop at 12. Can I stop at 1? It's supposed to be 12:30, but it's 1. So this is a time window. I want to see my setup form within this time window, right? I want to buy and sell within that time window. So that's the New York Killzone for me trading the gold, which is the same thing you can see right here on the okay, I think it's here, which is what you can see right here on the MT4 platform. You can see from here all the way to this zone. So this is the kill zone for me. So back to the trading view platform. That's that right there. So all I want to do is I want to wait on the 15 minutes and play by the ear. So the next thing I want to also outline before I forget is also the New York midnight session, which is right here. Good, because that's also going to be sensitive to know our open price. So this is where price is currently, and before this new day started on the 15 minutes, and we have this inefficiency in price here. This inefficiency in price. So this is an imbalance. So we want to see if price is going to start giving us a sell moment. We want to see price come to fill this void, also respecting these previous 4 hours highs as areas of support. You get what I'm trying to say? Good. So that's if price is going to sell, because at this point we don't know. You can say we are expecting actually bullish prices, because as price has dropped here, price can actually start pushing up from this region, because this area is an area of fair value. You can say for price to drop into here and reject, it has tapped into an area of fair value. That's why you can see that this low did not tank into this high. You can say before the rejection, price just drived into an area of fair value. If it had tanked on this high, then you say it is the high that pushed it up, but it actually just drive through where this fair value gap here from this particular low to this particular high is this the fair value gap within this imbalance right here. So price just dropped aggressively and rejected immediately. So that's why we have this rejection right here, not because of this high, because if you zoom properly and look properly, you can see that that low did not touch this particular high, which is this price level right here. Good. So let's play the replay tool and watch what happens. So this is price, our price is printing in real time. And finally, good, you can see that drop in price there. We've not entered the New York midnight zone, but you can see the way price ran this old daily low right here. So that's very significant. So at this point, we could be thinking, okay, I'm looking for price to push to the buy side. Since price has run a low, we want to see a reversal to the buy side to continue the bullish trend, and seeing that price has actually tapped into this area of fair value. So, but we're not going to buy until we see price actually break this high, break a structure above this high. That will confirm our buy trend. Why this particular high? Because this is the high that started the sell-off that took out this particular low. Good. Not this high, not this high, but this particular high. Good. And again, why we cannot start buying here again is that this is not our kill zone. We are, mind you, we are focused on the ICT New York Killzone. Good. So look at I want you to just pay attention to the components that we put in place to be able to guide us. You understand? To know when to take a trade, being a buy or a sell. Good. So let's continue and keep watching price. So as we're watching price now has entered into the New York midnight right there. So we want to also outline with our horizontal line. We want to outline the open price, and this is the open price right there. So that's the open price of the New York midnight open, and that's the true day open price. You understand? Good. So let's continue and see what price does. So we can see that price is building to the buy side. So at this time now, while watching it in real time, we'll mark up this particular high and expect to see price break structure above that high and keep pushing to the buy side. Whether we can find an entry, and seeing that price almost getting to our kill zone. So that's very, very important and crucial for us while placing a trade. So I believe that let's drag this, since we're on the 15 minute, let's drag this to the 12:30 to give us our confirmed ICT kill zone right there on the gold. And this is the way I actually look at it actually. So we'll continue looking. Finally, price entered the kill zone, and that's it right there. Wow, that went faster than expected. Good. Let's take that back. Let's take more back. So price has actually entered into the kill zone right here on the trading view platform using the replay tool. So let me zoom everything out so you could see clearly. So this is how it looks like in price. So price entered the kill zone right there, but we can see this weak rejection to the buy side. So we don't know why this weak rejection happened. We can't know clearly from the 15 minutes, and that's why I actually dropped to the 5 minutes to get greater details. You understand, to know why and how in terms of price delivery. So if we look properly, we can see that we had this candle, this low of this candle come around these lows right here, and this particular candle came around this low and pushed up, and that happened exactly at the 8:30 New York time when we had the news. You can see the unemployment claims that came out. So it came out good for the metals, and that's why it pushed price to the buy side right there. Good. So that's high we're expecting price to break structure at, but you can see how price has failed to touch that level, confirming our institutional order flow is still bearish. So you can see the flow. You can see the way the market is being engaged in real time using the replay tool though. So our eyes is now on this low, and I explain why this low, because this low is the all the way from the 1 hour, this low right here. So why that low? Why 1 hour? Because 1 hour is actually the time frame, or you can call the bellwether chart for the you can call it the time frame that starts the intraday price action sessions. You know what I'm saying? If you're looking to catch intraday price action, explosive move in intraday sessions, you want to really focus on what the 1 hour is really doing. Good. So you want to focus on highs and lows rather on the 1 hour. So let me bring this thing back to 8 o'clock. I don't know why that's moved. So this how we have price. So we are bearish already. We know we are expecting bearish momentum because price failed to tap that high right there. So but our sell is not yet confirmed until this low on the 1 hour is actually taken out, and this low is actually significant because it actually cleared this significant low right here. So we had a low that was cleared, to the left side, and also to the right side. We also have a low that is cleared. This all on the 5 minutes. So this is a strong intermediate low, swing low on the 5 minutes chart. So I believe you're following through and you're getting a lot of understanding from what I'm sharing. If you don't understand anything, you can leave your thoughts in the comment section. I'll be sure to get back to you. So all we want to see is price break this structure, we want to say, and give us a retracement, and that will be our entry. Good. So, and that's it. That's the break of structure we're looking out for. So we can see that price has actually finally broken through. We want to say good. And now all we're waiting for now, we want to see a protraction, a protractionary move. You want to say, one can say, why not start selling on this candle? Yes, I can start selling on this candle. You get what I'm trying to say? But the question is, where can I put my stop loss relatively in terms of a swing high that I'm sure that price will not knock me out? That is there, and that's far. You understand? I can put my stop loss here, but that place is far. You understand? So I want to put my stop loss on a swing high that's very, very close. You understand? So I'll rather wait for a protractionary move to actually give me that particular swing high I'm looking for. So have you seen why you want to wait and not actually get an entry right there? So let's wait and see if we get a protraction. And good, right there. Wow, this moved faster than us. Let's clear that out back. So good, you can see the protractionary move like this, and one can decide to enter right there and on this particular candle. And why is because that is 9:30. 9:30 is actually when we have the market opening for indices. You understand? We have the market opening for the stocks and the rest. You get, so the index market tends to open around 9:30. You understand, New York time. So you can see the injection in liquidity immediately after that move. So if I was trading this in real time, I would like to enter at that zone. And again, if you go to the 1 hour, which I told you is the intraday level, you can see that retractionary move actually came into a series of order blocks here, all these up close candles. So that's that protractionary move right there in the 5 minutes. So you can see, let's go back, you can see how it came to that particular line. This is that line right there of the order blocks all the way, and this line is actually New York midnight open. You can see the alignment in price once you have your time element right. While we waited for the kill zone, we see how time and price now align. New York midnight, order blocks on the 1 hour, and protractionary move on the 5 minutes. You see how they align for a sweet spot entry. I think I should even decorate that area for us to see. Don't mind me, I like doing things. Okay, I think I like this here. So let's decorate that area sweet spots. So this is a sweet spot entry right there. Good. So you could actually enter that zone right there, or you can refine it to the 1 minute, but I prefer you stick to the 5 minutes. Good. So all we need to do now is, mind you, this high is, this line is actually the high all the way from the first high on the 4 hours. But mind you, it has already been utilized by this low right here, so it's now insignificant. So you can remove that out of your chart. You can remove it out of your chart because it has already been utilized double time, so it's no longer relevant. So the next high is this particular high right here. So this will be our area of target. So since we already have a protractionary move and we now have a swing high where we can place our stop loss, we can now set our risk to reward right here. Good. So we can keep our stops above the high and aim for our exits right here, exactly on that high right there. Good. So I believe this is a 1-to-1 risk to reward. So let's enter a sell right there and say it pans out. Let's play it, and obviously very nice. You can see how price ran through that low right there. Good and good and good. So without further ado, let's cut out that position. So mind you want to be exiting right here, not when prices started going against you, because this is your area. But just for the benefit of the replay tool, you can see how that panned out. You understand? So this is all the entry that you would have needed for today. I don't want to talk about this buying, so the buy side. You understand? I don't want to talk about that, but I just want you to focus on this whole sell from this zone to this area right here. Actually, this is the entry price at this down close candle right here on the 5 minutes. That's your entry, and this is where you're looking to exit. And this is, I can tell you, this is over 700 pips to the sell side. You understand? And this is on the gold USD. So this is what you'd have caught if you had followed it step by step. And mind you, what framed our entry is the imbalance we had. If you let me remove the markup I have. You can see our price. Let me zoom that. You can see our price came down for what? This imbalance right here, and stopped at this particular high right there. Stop at this high, so you can see our price drive down. Good. So this is market efficiency paradigm in action. You know what I'm saying? That's why you had this free fall in price right here. Good. So this is classic market. I don't know what to just say more. You understand? This is perfect. If you follow this step by step, I'm sure you are going to really develop yourself. You're going to see that these things happen day in, day out, week in, week out. You're going to say. So what I want you to do is mark up the charts. You understand, step by step, the way you see me do it and the way I recommend in the first and the second video. If you don't understand anything, just leave your thoughts in the comment section. And I said this journey is a journey of 3 months. We are going to continue series like this on the gold USD, on the ICT and on the ICT New York Killzone from this month of April through to the month of May, and we're going to be ending the month of June. So you get your notes ready, jot down every single details I say. You understand? Watch the videos to the end. I'm trying to keep the videos even as short as possible to be able for those of you that don't have a lot of patience, you understand, to be able to consume these contents efficiently. So I hope you find value into this video. If you do, hit the like button, the subscribe button, and see you in more videos.